This vegetable vendor enables me to buy this apple without interacting with the farmer. In other words, there needs to be a market for us to go to buy the fruits. In this vegetable mandi, farmers come from nearby areas to sell their produce. And government agents, private players, and individual wholesale buyers come here to buy vegetables. This is actually very similar to a stock exchange. And we have two major stock exchanges in India, the BSE and NSE. Here, buyers and sellers can exchange shares via a bidding offer process. But before we understand how this works, let me place an order on my broker terminal, and then we can understand the journey of that single trade. So I am adding Reliance to my broker terminal. This, as you can see, is the market watch, and I'm using Zerodha Kite for this. And this is the current last traded price of Reliance at the moment. Now what I'll do is, I'll place 10 shares buy order. And as you can see, the transaction took seconds, but lots of corporate entities were involved in this trade. So let's understand the journey of that trade one by one. Now, for these shares to be credited to my Demat account, there are a lot of market intermediaries involved. So let's understand how that works. So let's first start with the broker. And I'm going to oversimplify of the journey of that trade that we took all the way till how it's credited to my Demat account. Actually, in real life, there are a lot of other steps, but let's not complicate it with this example. So first, we'll start with the broker. We placed our order of Reliance using Zerodha Kite, which is my broker in this case. And a stockbroker is a corporate entity registered with the stock exchange as a trading member. They also hold a stockbroker license. This is where you place your buy and sell orders. A stockbroker operates under the prescribed guidelines by SEBI, which is the regulator for the capital markets. A trading account is an account you have with the broker where you can make buy and sell transactions for securities. Orders can be placed on a web platform or on a mobile platform. I used Zerodha Kite's web platform to place that order for Reliance shares. Some of the basic services a stockbroker gives anyone is access to markets and letting you transact, give you margins for trading, provide support if you have to call and trade, issue contract notes for the transaction, facilitate fund transfer between your trading and your bank account, provide you with a back office login so you can see the summary of your account. The broker charges a broking fee, also called brokerage, for the services that he provides. Now it's up to you as a client to figure out and get the right balance between the services you want to get and the brokerage charge you want to pay, because the brokerage charges can vary from broker to broker. After the broker, the order is relayed to the stock exchange. As you already know, India has two stock exchanges, that is the NSE and the BSE. Now, stock exchange is a place where buy and sell orders are placed and matched in the exchange, hence the name stock exchange. So bids flow in and offers flow in. In fact, we showed you the market depth with all the bids and offers. So basically, when we placed that order to buy Reliance, a corresponding offer was matched and a trade took place, and that's how we were able to buy those shares for Reliance. So after the trade has been executed, we'll move to the clearing corporation, where the trade will actually get cleared. There are two clearing corporations in the country, NSCCL and the ICCL. These are wholly owned subsidiaries of the National Stock Exchange and the Bombay Stock Exchange. So what are the functions of the clearing corporation? The job of the clearing corporation is to make sure that after a transaction takes place, it actually goes through, which means that the account which needs to pay the money, that is debited, and the shares get credited to the account which has purchased the shares. So neither of the party, neither the buyer nor the seller, default on the transaction that took place. So in summary, you place the order with the broker, it was matched at the exchange, and the clearing corporation ensures that that transaction takes place. Once the clearing corporation clears those shares, the next step is the depository. The depository is like a digital locker, storing all of your shares digitally. And the broker and the depository are deeply integrated, which means when I bought those Reliance shares, once they're credited to my account, I will be able to see it on my broker terminal. And there are two depositories in India, CDSL, which is a wholly owned subsidiary of the Bombay Stock Exchange, and the NSDL, which is a wholly owned subsidiary of the National Stock Exchange. You may also want to understand how the broker and the depository are connected to each other. They're connected via a mechanism called a depository participant. So if you want to know more about it, check out this chapter on Varsity. So the depository is the last step for that transaction of Reliance that we were doing. This is where the shares will get credited and be reflected in my account that I can see from my broking account. Now, apart from this journey, there are two other participants we wanted to talk about in the ecosystem. That's the bank. Now, the bank has many uses, but one use of the bank is for funds pay in and pay out. So when you open a broking account, you might want to deposit money. You do that via the bank. You also are able to do a payout and receive any money, withdraw any money from the broker when you choose to do so. You will also receive dividends and other things from the stock market into your bank account. So it is also a part of the entire financial market ecosystem. And finally, we have SEBI. SEBI is the financial regulator for the entire market, which means all the participants you see here, from the broker to the exchange, clearing corporation, depository, are regulated by SEBI. In fact, all the rules and regulations are drafted and enforced by SEBI as well. You can see some guidelines around the stock market in this link over here on SEBI's website. Banks, on the other hand, are regulated by the Reserve Bank of India and not SEBI. The rules prescribed by SEBI safeguard the investor and trader. The stock market participants, like traders, retailers like you and me, domestic institutional investors like mutual funds, there are also some other foreign entities like foreign investing institutions, foreign banks and hedge funds. They also form part of the ecosystem because they may place trades or investments within the capital market. And here are the key takeaways from this video.